Hi, listeners. Today, Howard and I reflected on 2025 and implications for 2026. We discussed the largest M&A deal announcements, the advent of private equity, and more. Enjoy. Hi, friends. Welcome, everyone, to the Future is Bright podcast. My name is Chris Batz, joined by my co host, Howard Rosenberg. Howard and I are at the center of law firm talent and strategic growth here in New York City. Howard is a partner and head of talent intelligence and acquisitions at Barretts and Brunel, and I advise and facilitate corporate law firm mergers as well as private equity investments in corporate and consumer law firms at Columbus Street. And today, Howard and I are going to have a kind of an open-ended conversation recapping 2025 and looking forward into 2026 on topics that everyone is dying to talk about. So, Howard, what an eventful year 2025 has been.
Chris, I hope you've been busy on 2025 because it's going to be even busier in 2026, I think.
I'm still trying to catch up on sleep. I finished school in May and I thought I was going to have a relaxing summer with the family. And it was the complete opposite. And it's been crazy since.
There used to be a seasonality to the talent portion end of the business, and that has gone away. That does not exist anymore. Now it's a constant stream of either talking to firms who want to obviously grow in any way that they can, but there's no downtime now. It's a constant slug of kind of conversations around growth.
So you're not sipping margaritas and chatting to investors, or not investors, but recruiters on the beach, or
I think
talent?
that happened during COVID, I think, at one point. And then beyond that, I think that's gone away.
So 2025, I mean, obviously there's some huge themes that we're going to talk about today. Big merger announcements. We're going to walk through several of those announcements. Obviously, private capital was a big one. Private equity, Howard, you've been talking about that with this unique concept that you're bringing up and championing, which is private capital maybe partnering with law firms to maybe acquire and help law firms leg up on talent. Love to dive into that as well. And then just this wildness of investor potential in law firms and market value, that law firms have market value today, and that there are options for the equity of law firms to cash out or to participate in the growth, the enterprise value growth of their law firm, which is new thinking.
New thinking, and I think it kind of is a symptom of kind of the larger things that are happening in the industry. I think like me and you seem to be at the epicenter of we're seeing kind of real live market consolidation happening in real time. As you mentioned, the private capital coming into the business for the first time, the war for talent, then you've got the AI technology coming on stream, and it's fueling, a perfect storm of activities that's really causing kind of law firm managing directors and managing partners about how to achieve law firm growth in this environment. And I think the rules of yesterday are kind of going away, and things that have worked previously are no longer working today. And this is one of the reasons why we're seeing all these mergers happening, because I think people have to make a decision if they're going to get large or are they going to go niche and specialize in certain areas of the marketplace. You can't be in the middle of the road anymore. You're going to get punished.
Yeah, and there's definitely law firms thinking forward, thinking long term. The merger announcements that were discussed, a lot of them were huge deals, very large law firms. So the last 5 years of 2020 to 2024, I've been analyzing through mergerwatch.com, and there wasn't monstrous transactions that took place. A lot of them were smaller, but now we're seeing AmLaw 100, AmLaw 50 firms making these huge announcements and tie-ups with across the pond counterparts and here in the United States. So there's a lot of talking going on.
And also, I think when you looked at mergers in the past, it was always based on either geography as a real driver criteria, or it was profits per partner to try to achieve parity. And I think with some of the deals that have been announced recently, I don't think that's happening. I think you're seeing other things about, potential opportunities by two firms joining up and then going forward together in the marketplace. And that's new territory. That has not really happened in the way that we've seen traditional mergers happening in the marketplace.
Yeah. So let's talk about some of those mergers. I mean, we're going to list off the big ones today on the show. Um, you know, early in the year, there were a couple big ones that were discussed. So Herbert Smith, Freehills, Kramer, Levin, big tie up,
Big time.
um, very large firms combining, coming together. Um, you know, obviously the uh, Taft made an announcement and officiated it in 2025 with Sherman and Howard, the Colorado firm, and an excellent land for Taft.
And also,
Um,
they acquired Morris Manning in
it
Atlanta,
did.
which is again another preeminent firm in Atlanta, and so they're marching forward.
Yeah, and just to talk about Bob Hicks for a second. I mean, Bob, who will be is a guest on our show, and we're going to be sharing an episode. But and he shared wisdom in what he's doing, which is brilliant. He's really going after the middle market, but he's not talking to what might be bottom of the barrel rates of a larger city. He's really looking at very competitive, higher rates. It's just not 2000 an hour. It's not averaged 15 to 1800 an hour, but there's definitely these firms that are going to have partners in the thousand rate hour rate. And so him able to land Sherman and Howard and Morrison Manning in these two key cities of Atlanta and Colorado, huge win. I mean, both of those firms were 100 attorney plus.
Yeah, and I think he's building an engine that he's trying to go after what I think that we all calling kind of the super mid-market firms, where
Mhm.
somewhere between that 600 and 1,000 attorney size, where you kind of dominate key areas of the marketplace because of the arbitrage and pricing. And I think he's got a real shot at building something that will deliver enterprise value by doing that going forward. I think he's looking at other markets as well, and it'd be interesting to see how that kind of plays out in 2026 for him.
Yeah, yeah, very exciting to see. He definitely has other markets, and he's definitely not done. Um, encourage everyone who's listening to this episode to check out our episode with Bob Hicks. What else, Howard? What other merger announcements?
I thought the recent one with Cadwalader and
Yeah.
Hogan Levels obviously happened just at the right at the end of 2025, and that's interesting for a whole series of reasons. It's kind of sad in one way that Cadwalader storied. If you graduated law school in the 1990s at some point, that was the destination law firm of choice to practice your craft at. And it's sad that it's happened that they're no longer independent. But this is kind of a sign of the times about clients and legacy relationships that may no longer hold the key for the future. And so obviously but great acquisition for Hogan's in terms of giving them a better and a deeper footprint in New York.
And it created like a top 10 firm. I mean, what they did was bolt on, I mean, outrageous legacy, as you said, Howard, in Wall Street. Um, and unfortunately, market conditions caused this to happen over time. But, there's talk of, this was a rescue. There was talk of, hey, this was strategic. It was valuable. And clearly, for them to land at Hogan and Levels, a really strong corporate brand in the United States, in UK, to bring on Cadwallader, as I mentioned when I was chatting with Law.com about this, like it was a boon for both parties. Like what an exciting platform that they can create together.
And Hogan's have been after trying to get a deeper bench in
Mhm.
New York for years through kind of the lateral acquisition process. It's just been very slow and very painful. And this gives them the jolt of energy, probably
Yep.
to have a robust New York presence. And it'd be interesting to see how that kind of rolls along in the years ahead.
Yeah, honestly, and without forgiving me being repetitive, but like um, kind of the envy of corporate law firms to land Cadwalader to make the economics and to really strengthen a premium brand in the New York market. Hard to do. So yeah, and the only way to grow today in most cases for these firms is going to be through laterals. You got to have a robust um, supply of candidates coming through, but for significant strategic meaningful leaps it's got to be done through M&A. And like you said, Howard, they were able to tie the knot. Um, and that's just I believe there's a lot of envy there for other firms. Wish they were able to do that.
Agreed.
Um, Let's talk about another one. Obviously, so the Perkins Coie Ashurst, two monstrous firms coming together. Huge announcements. These deals, and I'm law firm leaders know this. Like these deals take a long time to work, and it's not the only firm that they talk to. So it's honestly a celebration of alignment, and agreement, and honestly, it has a lot to do with long term thinking. This is not a quick hit. This doesn't happen fast. And this isn't about tomorrow. It's about the next 10 years plus 20 years.
I think that's right. This is a long-term kind of play about, how both firms see the market shaping out. And I think, Ashfors, who many people maybe don't know about in the US, that is a preeminent brand in the UK. And it's interesting that, they joined up with Perkins. So again, I don't know all the metrics offhand, but I think the market is really interested to hear what the story, what the narrative is forward for that combination, because it's an interesting fit for both sides, really, and it could do really interesting things for the market if it's properly kind of managed going forward.
Yeah. And I'll just share this. I mean, Ashurst is 1,900 attorneys, whereas Perkin is 1,200.
Yeah.
And it's just, you're creating a behemoth of a firm when you're combining all that. There was another major tie-up overseas. Winston Strong, Taylor Wessing. Is that correct?
Taylor Westing. That's right. So again, not really on the balance, not kind of a firm that you would traditionally associate with Winston kind of merging with, but it's interesting. And again, I don't know the details of the combination, but it's an it's an interesting and odd pairing because it's not a natural synergistic of two firms coming together. Obviously, there must be something there that both firms have seen that they're going to capitalize in the marketplace, and that one is going to be interesting. That one is like, again, I think I'm missing part of the dialogue here, but again, I think Taylor Westing was a top 40 UK independent law firm that decided to obviously uh, go with Winston.
And I believe I heard just through the grapevine that Taylor Westing was definitely looking for a tie-up with a U.S. firm. I think, and I know these UK firms, and there's a number of them still in the UK looking and talking to U.S. firms. There's a pretty large appetite. But I know it has a lot to do with just the right branding connection mix. Obviously, there's alignment on values, culture, and economics, but it 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 says a lot to the market when they can successfully tie with an AmLaw 100 or AmLaw 50 firm.
And I think you're starting to see there's only so many natural dance partners in the marketplace. And I think with the Winston Taylor Westing kind of tie up, again, it goes back to like you would never do this on a straightforward profits per partner or geographic type basis. So again, looking behind the scenes about why these two kind of got together, I think there's going to be more tie-ups like this than the traditional kind of transatlantic mergers that we've just talked about.
And then obviously, you and I were at the event in Austin. I'm totally blanking the name.
The Legal Tech Fund,
Yes.
LTTF.
Yeah. And just before we arrived, McDermott made the announcement of tying the knot with Schulte. Is that correct?
Yes, correct. That's right.
And so, very exciting, premium brand. I mean, unique. I mean, so Schulte Roth, again, storied white shoe firm that's been around for a very long time. And to be able to find a premium brand dance partner to connect with, quite like Cadwalder with Hogan Lovells, again, celebrated. And very exciting to see that and to hear of Ira's leadership and thinking through that. Again, these deals do not happen overnight. They take lots of nurture, a lot of collective agreement, as well as keeping all this quiet. To pull off these transactions is a Herculean effort that requires the kind of covert operations of the CIA to make sure no one leaks this type of thing, because it's so disruptive, and it's very misleading when it does get out erroneously. And so, what a way to celebrate. Howard, when we were there, what was the exciting news also potentially with McDermott?
Well, I think Ira was talking to obviously the members of the press, talking about the traditional MSO type structure, and that they were either exploring or having kind of beginnings of conversations about kind of maybe taking investment from private capital and going down that route. No one said anything publicly like that for the first time, but I think he was like one of the first, chairman of the AmLaw 100 to maybe kind of, state that they were at least having some sort of exploratory conversations. And then everyone kind of flipped out at the event because everyone's predicting a chain reaction of other firms going down that. So there's definitely a first mover advantage for the firm that does decide to kind of ink such a deal. And we think that it's going to eventually, some deal like this is eventually going to happen in the marketplace at some time, maybe through 2026. Who the first mover is, I have no idea. But it's interesting that, Ira did have some sort of a conversation and kind of got everyone's appetite going.
Definitely was a frenzy. And then there was lots of speculation. And yeah,
I mean, people were freaking out. They were just like, oh my God, everyone was trying to get the scoop of the inside knowledge, and no one that I was connected to actually had any deeper knowledge than obviously what was said in the press.
Yeah. Yeah. And I mean, obviously, there's a lot of NDAs involved and a need to keep things quiet. Uh, but there definitely is a lot of confidence and certainty of some AmLaw firm taking, and most likely a large AmLaw firm taking private equity in 2026, either a buyout or a minority investment to somehow be announced. And so there's lots of talk. But before we get into that more, I have to kind of do a shout out. So the other transaction that happened this past year that was announced was Frost Brown Todd Gibbons was also a significant transaction where Frost Brown Todd, around 600 attorneys, picked up Gibbons 200 attorneys. And then I also have to just kind of do a shout out to Pat Whalen over at Spencer Fain, who picked up, I think it's Golden Block here in New York. Again, that was a big transaction for them. And we'll be releasing more in mergerwatch.com special report on these transactions as they come out. Howard, with your kind of ear to the ground pulse with chairman and managing partners, what are you hearing about private equity and their thoughts? Any kind of anecdotal feedback you're getting?
I think that people are now finally having the exploratory conversations, and I know the institutional investors are obviously on auto dial and giving the presentations to all the AmLaw 100 without a doubt. I think no one has bitten yet. I don't think there's any announced deal that has happened yet, but I think it's starting to have the conversations about what you described, Chris, as kind of enterprise value, because there's obviously there's a translation that's slowly happening between people who are running law firms, and they may not be business qualified to do that, but they are they are the leadership team. And then you have the outside investment community wanting to really have some sort of foothold in the legal marketplace through maybe a minority type investment, because there's the wall of money out there looking for a home in legal. And the dialogue and the language between the two are just, they're not connecting yet. And I think because this is not a traditional kind of play where both entities understand one another. And I think, as we always say that legal is different. But I think the challenge for managing partners who want to obviously put the numbers on the board for growth are taxed about how to do that. And so they have kind of a fiduciary responsibility as part of their role to investigate things that would deliver that growth. And you have to now include private capital in those conversations. But that language around that corporate finance language about sometimes debt is good, how do you leverage that? I think that's a foreign territory to many managing partners. And I think people like you, me, and other colleagues are starting to now be part of that mix to help the two parties come together to uncover is there kind of additional enterprise value to be had by either doing some of these types of deals, or maybe the model has to be perverted to change to fit the unique qualities of law firm land?
Yeah. So um, for law firms, many of them struggling to figure out succession planning, figuring out how to transition new partners, figuring out, I mean, a lot of law firms tend to be a bit more coy on capital calls or asking capital of partners. I know many managing partners I talk to pride themselves on not asking for capital, having very low capital requirements. I do remember during COVID, there were capital calls because of the struggle and the hit to their balance sheet cash wise. And I think there's a new way of thinking to um, the value of a law firm, the shares that equity have, the potential of building wealth besides maximizing um, annual uh, partner compensation, which tends to take most of the capital, if not all of it, out of the firm to minimize taxes, which has always been the key. Um, and there's going to be a reversal of that to some degree, where uh, there's talk that law firms are undercapitalized, and if partners were thinking more long term and having more skin in the game to truly see their value compound over time, then they're shifting and thinking more like investors versus kind of um, eat what you kill 12-month one-time contributors to a P&L. And so it's interesting to see the look on managing partners' faces, equity partners, when I say, look, um, what would it look like, or would it interest you to um, get paid in multiple ways and to compound the value of your firm over time? What would it look like to receive a check up front, potentially, and then receive distributions, and then receive a catalyst check based on a new investor or new capital into the firm? What would it look like to, instead of um, grow your firm just by raising rates, but maybe by acquisition and having a capital partner that partners with you to increase your market share that way? These are conversations we're having. Of course, the multiple comes up. What are we worth? What could we get if we held out? Um, I am seeing today. So I've talked to like about 15 different investor groups. Um, their investors are anything from family offices to um, institutional money, endowments, things like that, and some large PE. And most of these investor groups want to invest in law firms and own law firms long term. So big fear is they're going to come in, make a bunch of changes, and walk away and sell us. That's actually um, I don't even think I've ever heard that as part of a playbook, because these guys have done investments in other professional service spaces, particularly accounting, but many others, and it doesn't create value, but it just kind of does a quick pop, and it doesn't benefit a lot of people. And so, will those investors exist out there? Yes, of course, and they'll try to do deals, but it's not the ones I'm working with. And there's really an eye towards creating long-term value and to creating um, investing dollars in law firms that create an environment where attorneys love to come to work, would love that have skin in the game, and that they end up making more money over time. A place that's attractive to laterals, attractive to talent, um, skin in the game for even non-attorney talent, a value for management that has real operational skills and abilities. It's a whole nother conversation on what does it mean to create value versus taking value out of the business.
Yeah, and I see a much more kind of investor attitude about future proofing the law firm from a managing partner point of view. So Whether they actually go down physically an MSO route or take investment, who knows? But they are starting to now put the fundamentals in place about future proofing the organization so they can afford that talent going forward, or they can invest in certain key areas of the business that will feed other parts of the firm and improve their market conditions. So I think that's all healthy. And also the constituents themselves, the partners, are also starting to ask questions of leadership like, I've been here for 20 years, 25 years, and if I leave, I get nothing. So I came into the business with nothing and I leave with nothing. And yet the people that I'm advising on, if I'm an M&A a partner on, and their clients are making their clients are kind of getting, payouts and payouts on things that get sold in the marketplace. And they're saying, look, I'm just as smart as our clients. I'm here 25 years. Where's my golden pension? Where's my kind of enterprise value? And so it's interesting that the people inside the organizations are now starting to ask questions about in this day and age, and maybe it's long overdue, but the questions are now finally being asked by the people inside law firms at a specific level of the business. How can we kind of go down this kind of route? It may not be the route that we're all talking about. But again, I think it's interesting about, to your point, Chris, about how do we kind of build enterprise value as a way to really differentiate our firm and compete in the marketplace today.
It's worth me sharing this because there's probably not a lot of information in the market yet. Who are making offers and what law firms are looking at offers? It's not everybody. And it's really important to understand. So right now, investor groups, PE sponsors are making offers to law firms, typically, revenues of say 4 million to like 40 million. With EBITDA, that is, your profits with a kind of normalized salary for equity shareholders. EBITDA might be anywhere from $1 million EBITDA to maybe 10 million EBITDA, maybe a little bit more. And those equity get a multiple on it, that EBITDA. A lot of these deals are buyout offers, meaning, you know, the private equity shop will write a check and to buy out the firm of the equity owners, and those owners will roll part of that buyout back into the firm and actually have to do that. It's not a choice. They have to participate with skin in the game to also have equity in the deal. So they're getting like 100% buyout potential, but the idea is they're going to roll 20, 30% back into the firm. So the buyout firm, the investor will own probably like 60, 70%, maybe 80%. And the equity shareholders will own, the rest. What type of equity composition does that look like? A lot of these offers are written to like 2 or 3 equity. So these aren't huge firms and they're not huge partnerships. They're much smaller and it's easier to get those deals done. There's less people to debate. There's people who see the value in it. And there's lots of reasons why these managing partner equity partners are talking. Part of it is it's a potential to get retirement money. There's an option for succession planning. There is a true capital partner to help them scale and grow. So these deals are being done with platform plays, meaning these law firms have an established law firm. They have established systems. They have established, in most cases, management teams. They have a brand. There's value in the firm. And these PE firms are, in essence, investing in, buying them out. And they're going to be using that firm, using is not the right word, but partnering with, to add additional firms and grow, in most cases, regionally with what they're doing. And what type of firms? It's all of them. It's business law firms, commercial law firms. It is boutique, but it's also consumer, personal injury, family law, corporate immigration. So consumer immigration, corporate immigration, it's all of them. I've heard offers being given to insurance defense firms. And are they all accepting the offers? We're right in the middle of all these transactions taking place. And we're going to see announcements in 2026. It's the year of private capital coming to these law firms.
So, Chris, I think you mentioned, my question is always like, if you get a payout, what's the firm going to do with the money, basically? I know you kind of there's a repayment of partners' capital and all that stuff, but in terms of actually growing the business, are you saying that you're projecting kind of a series of roll-ups happening in the industry at certain kind of practice group levels, where that multiple effect really does kind of parlay into a higher valuation going forward?
Yeah, so think of three or four buckets. The anecdotal comment that always comes out with PE money in law firms is tech and talent. So there's a streamlining of technology or development of technology that creates efficiencies where there is a lot of inefficiencies. Some of it might actually be developed in-house, or it might be purchased, if you name it, to make the right investments to create those efficiencies. Talent, because these are human capital organizations and we need really great talent to take the organization to the next level. And that might be JD talent, attorney talent, and it might be non-attorney talent to help manage the growth of the law firm. Could be adding on a C-suite team. Then you have a war chest for M&A. And it could be that war chest is used for law firm M&A and talent M&A. So acqui-hires, pulling laterals, like folks that would definitely work with you, Howard, to strategically pull talent out of law firms and bring them in. That money is for that as well. And then the fourth component is always this idea of succession planning. It's a very powerful tool to help the most senior attorneys finally able to get their ticket and be paid for their hard work. A lot of those deals for the most senior equity usually have some form of earnout. So it's not like, hey, I got this, I can go now sip margaritas somewhere. There's usually 1, 2, 3, 4, 5 years, some sort of earnout, and it all is custom for every deal for each firm. So those are the four buckets you want to think about.
And Chris, again, one of our guests I think we're announcing shortly, Natasha Harrison from Palace Partners, which again, I think will air shortly. She was an interesting person to talk to because again, she's on the other end of the spectrum about kind of creating a new co from scratch, a new co entirely from scratch, and then obviously using technology and outside investment. And so, do you see that happening going forward in 2026? More of that kind of style of not joining the bigger, more prestigious firms, and then obviously, hanging out their own shingle and doing something really innovative in the marketplace.
So if we talk about Palace and Natasha, we have to talk about Kindleworth. Our friends over at Kindleworth in the UK. These guys are best in class, a deep bench of operational talent for law firms. And they launch high-end boutiques with this incredible talent that comes out of BigLaw, both in the UK and Europe, and then also in the United States. And Natasha is a perfect example. And they provide, without it, and forgive me, it sounds a bit overstated, but like law firm in a box services, plus capital support from Burford Finance, should they need it. But yeah, we're going to see a lot more of that. I mean, obviously, the big mergers you and I just talked about at the beginning of the show, there's going to be people who are going to be conflicted out or may not be thrilled with the merger. And yet, they're high performing partners, great at what they do. They're going to end up leaving and they probably will hang a shingle. They're going to want to have a Kindleworth to support them fully or as much as they need to help launch their law firm. There's other reasons why those people have left. I know with the current White House administration, people have been leaving law firms and creating their own firms just based on their own principles. But, if there's anything that will be consistent over the next 10 years, law firm failures, law firm mergers, and new law firms starting. We're going to see them.
I think that whole boutique category is going to explode because I think there's going to be some truly global elite firms that are going to be doing just fine in the marketplace. There's going to be maybe a handful of super mid-market firms that can compete because of the price arbitrage. And then you're going to get this huge amount of boutique practices practicing in the other areas. And I think that's going to kind of reshape the industry. And you and I are going to continue to have a ringside seats to see how this all unfolds in 2026.
So there's one other party involved in this that I'd love to bring up because it's something that I've been curious about for years in the talent space. There's tech companies, and these are venture-backed tech companies calling themselves service providers that either have attorneys already or looking to acquire law firms. And their proposition is interesting, Howard. They are saying, hey, you're a partner in a law firm. Why don't you come over here? You're going to do what you love. Let other people do the stuff you don't want to do. And by the way, we're going to give you skin in the game. And it's different than private equity. It's venture. And so their playbook, their exit plans, I mean, honestly, it really is. There's a lot of choices. There's a lot of options out there. It's very exciting.
They are building kind of an IPO, a future IPO engine, basically, to do that. And that is really interesting because the metrics to run a tech company is very different than a traditional law firm, right? And so you get these very energetic, highly committed, highly focused people running those enterprises, and it just happens to have legal people attached to it for obvious reasons, but they're run on a completely different basis, and there are marketing engines basically that really overpower the industry.
Yeah, lots of exciting developments, lots of innovation, and we're going to see it really kind of blossom in 2026. And I think we're going to learn a lot more about all of these things. I don't know if it's going to take the first 2 quarters. I think it's probably more likely the third and fourth quarter when we really get something substantial. But rest assured, Howard and I will be having more of these and more guests to talk about these subjects. And it's a lot of fun.
Enjoy, Chris. Strap in.
Yeah, so thank you everyone for listening. We really appreciate the time you've put in to kind of listen to what we're talking about. We really invite you and welcome you to share our content. Feel free to comment on it when we post on LinkedIn and wherever you listen. If you listen to us on YouTube, please feel free to comment on it as well. And if you'd like to suggest guests in the sphere of law firm growth and innovation and capital, please do that. Reach out to Howard and I. We'd love to hear from you.